Sunday morning. I wanted to make this video while the markets are closed. I have no live trades to manage. I have no live room to go to. I have no investors to communicate with. I really wanted to take the time and go over the basic approach that started this service over a year and a half ago. At the time, all we had, and it was in Telegram, it wasn't in Discord, but all we had were the levels that I posted every evening, US Eastern Time, after Globex opened. There was a timestamp, and so sometime between 6 and 8 p.m., I would post these levels for Globex and the following trading day. And then at the time, manually, I would draw these levels on the chart. I would find the midpoint. The idea was below the midpoint, I was looking short. Above the midpoint, I was looking long toward the buy level, the sell level. Well, since we had this indicator made and coded, I should say, and this indicator plots the levels that I post in Discord, and it finds the midpoint. Now, the reason I started this service was, number one, of course, to help traders, but also it was no extra work for me. In other words, that's what I was doing for myself. So, those of you who don't know, I have 11 prop firm funded accounts. A heck of a lot more people have a heck of a lot more accounts nowadays, 20 or whatnot. I have 11, and that's what I was doing to trade these prop accounts. So I said, well, why not share it with other people? And that's how the whole thing got started. Over the past year and a half, I introduced new features, a live room because I was asked to open the live room. Then, of course, I realized that only about 1/3 of the premium members actually could attend the live room, where I mainly focus on the NASDAQ and the S&P, but I also talk about gold and crude. So then I created the trade indications channel in Discord, where I post about 2 hours before US session opens, mainly again discussing the NASDAQ and the S&P, key levels, targets, and market direction. And I feel all these new features kind of take away from the basics. And for me, nothing changed. That's how I trade. If you want to see live trades of the approach I'll be talking about, there was one video from like 10 days ago. It's going to be the first link in the description. Take a look at it. There are plenty of live trading videos. I really want to focus today on the approach. So I'm going to pick Friday, this past Friday. This way I'm not cherry picking a day. Friday was actually challenging. Friday was a very range bound day in the indices and to some extent oil as well, but a beautifully moving directional day in gold. So I just want to show this contrast between markets that are in a range and going nowhere, and a market that is moving directionally. Obviously, a market that is moving in one direction is much easier to trade, as opposed to a market that just kind of range bound in a fairly narrow range. So we're going to talk about the S&P, of course, and gold, which was directional. But we're going to take a look at every market, maybe with the exception of euro. I've been kind of, for the most part, staying away from the 6E, as it really has been somewhat challenging, but we can take a look at it as well. In any case, let's start with the Russell. All right, so the RTY, again, Thursday night is when the levels come out for the following day. So Thursday night, these were the levels for the Russell. Again, the indicator plots them on the chart and it finds the midpoint. So let me first of all answer the obvious question here. What are these triangles? This is a very simple indicator. It's called open close from the indicator store. It is obviously available for sale from the indicator store. If you contact Pablo, the CEO, you tell him you're part of this community, he'll probably give you a discount. I don't have a code right now for it. Maybe I can email him and he'll send me one. This is a very simple indicator. Like I said, it's simply open close. It just makes things a little more obvious. In my own trading, I do not use it. It just makes things a little more obvious on the chart. So what is the basic approach? Well, the basic approach is this. Normally, these levels that I post attract price. Very often, when price reaches these levels, there is some kind of a reaction the other way, probably toward the midpoint again. So above the midpoint, I'm looking for long setups. Below the midpoint, I am looking for short setups. Russell was one of these markets on Friday that was very range bound. So again, this when the levels come out a bit after 6 p.m. So we have European traders, we have traders from Asia. So I don't know when you are looking at the chart, but in any case, let's make this somewhat bigger so things are a little clearer, and then we can talk about what is happening. So below the midpoint, right, we are looking for shorts. Here is how I trade this. I am looking below the midpoint to get short, but I don't want to be too far away from the midpoint. I also don't want to take a short right into the level. Because, first of all, if the market doesn't have enough energy, it will not even exactly make it to the level. Even if it does, sometimes it would stop right before and turn around. So I am aware of it. I want to be short below the midpoint, but I want to start protecting myself, either trail price, take a partial profit if I'm in multiples, or just take an outright profit, just cover the trade as price begins to arrive toward the level. Normally, the market actually makes it to the level, or at least within a few ticks. This doesn't really qualify as getting to the level, but I just want to make a point. To me, this here, so let's make this again somewhat bigger maybe so we can see. This here would be the perfect short right over here. So within a Rancor chart, the bar, so this signal, let's say, would appear when the bar closes, and it's a Rancor bar, so the bar actually closes here, and the following bar opens here. Okay, this is for me the perfect short with this approach. Now, where is my stop? So the way I trade, my stops are not based on a random number of ticks. I take myself out of a position with a loss when price shows me that I am wrong in the direction of my trade. So if I'm in a short, when am I wrong? Well, if price tries or gets above the midpoint, so I'm looking at this pivot here, and my stop would be like right here. Once price is above the midpoint, I no longer, at least temporarily, want to be short. So this is the short. Stop goes slightly above this pivot here. I am targeting the level on the downside here, but that does not mean that I would allow a trade to be nicely in the money, do nothing as far as money management goes, and then allow it to become a losing trade. A winning trade, unrealized, let's say winning trade, should not become a losing trade. It's okay with me if it becomes a break-even trade. That's just part of the game. But I cannot allow it to become a losing trade. So If I'm short here and I'm in multiples, I start taking some profits like halfway here, somewhere here. I am definitely begin to trail my stop as price begins to arrive. In this case, I would probably been taken out, probably somewhere here, probably with a very small profit. I would have gotten taken out on the trail. Again, if I'm in multiples, I would have taken something off already, and then with the other part of the position, I would be taken out. So this is the approach, okay? Below the midpoint, as close as I can be to the midpoint without being on top of the midpoint. I don't want to, again, let me just clarify this. I don't want to be on top of the midpoint. I don't want this to be a short. Slightly below, like here. This is a perfect short trade over here. So the Russell does not make it to the sell level. Again, very range bound day on Friday. What happens? Price comes again to retest the midpoint. There is no signal here. Again, let's make this somewhat bigger. There is no signal here from the open close indicator. I would have taken a short right here for another short. Sure, all this was a test of the midpoint. Another short here. And then does nothing. You see, this is at end of the day on Friday. This is an example of a challenging market where there's still opportunities to get some profit if you were reasonable with your daily goal. Sure, yes. However, this was a challenging market that did not complete the direction to the sell level. This is unusual, but it does happen. All right, let's talk about the YM. So again, same exact thing. The levels I posted on Thursday evening. Here they are. Buy level, sell level, midpoint. Above the midpoint, I'm ignoring the short signals. Again, when I trade, there are no indicators at all. But I'm just, again, I did this just so it's easier to see. But I would not consider short signals for sure. Why? Price is above the midpoint. Now let's take a look at this, right? Here is a move above the midpoint, okay? Price is very close to the midpoint. I'm taking this long 10 out of 10 times. 10 out of 10 times. Where is my stop? Slightly below the midpoint. Because then I know that I no longer want to be long if price moves down there. We have a nice move higher. Again, if you have reasonable daily goals, I'm sure you have achieved it on this move. Now let me talk about this also. This, as I said, is a beautiful long signal. I'm taking this 10 out of 10 times. How about this? So here is my problem. Yes, we're still above the midpoint. We did not reach the buy level yet. So technically the market is still strong and it's still okay to take long signals. Here is my problem though. As I said, I like to take stops, stop losses I should say, if I am wrong on a direction of the market, right? Here, my risk is fairly reasonable. Price moves below the midpoint. I no longer want to be long. What is my problem here though, right? If price comes down, am I still wrong on the direction of the market? Well, price is still above the midpoint. I'm not wrong on the long until price is below. But look at the risk. I mean, that's way too much. Way too much. And by this point in the morning, I also kind of become suspicious that things are very sideways. So if things are very sideways, I don't want to just get into a trade. I much rather really pick locations, right? It just so happened that on Friday I was actually very bullish on the YM, more than I was on the NASDAQ or the S&P, but I still would not just take a long anywhere. And the problem is, as you can see, right, price is moving down. So I like to pick my locations. Let's say you missed this trade, okay? And now let's say you are here. For whatever reason, you were busy, you were not here. You can say, well, price is still bullish, I can still look for long setups. And my point is, it's a mistake. Yes, price is bullish. However, as I said, it does not mean you just take a long. That's not the right approach. No matter what indicator you use, all indicators are just tools. We need to use these tools correctly to be successful with these tools. It's never the case that the quote indicator is not working. Indicator is always working unless it's coded wrong. But other than that, the indicator is working fine. Perhaps it's the approach that is wrong. I would say you do nothing. If you miss that good one, you do nothing. You wait. Wait for what? Wait to see if price comes back to the midpoint. Wait to see. But how do I know it's going to come back to the midpoint? You don't. Nobody does, but you must trade on your terms, not what the market dictates. The market is going to do what the market is going to do. We have no control over that. What we have control over is if we choose to participate. And me, I only choose to participate when the market does what I want it to do, not what, quote, it wants to do. So me, I'd be doing nothing. I would be waiting. Now, I am waiting. Price gets below the midpoint. Is this a short? Of course it is. Yes, it is. Yes, it is. Objectively speaking, it's a short. Again, I was actually bullish on the YM on Friday, regardless of what I was. This is an objectively valid short trade. Let's make this slightly bigger. It is below the midpoint. And if you were targeting $100, 20 YM ticks, you got it. You got it. Now it's getting late in the day, but let's say it's not late in the day. Is this a valid long? Yes, it is. It didn't give you much. It gave you something. It didn't give you much. If you did not take a profit, to me, this would have been a stop. Here, price goes below. Would have been a stop. Again, me, I don't trade for the most part this time of the day anyway. Especially on a Friday, especially once I saw already that price is somewhat directionless. But again, just objectively speaking, this is a valid short, this is a valid long. You just at this point of the day had to be very flexible, or at least move your stop to break even pretty fast on this kind of a setup. Is this a valid long? Yes, it is. And now, if you did not take profit here, is this a stop? I would say no. Did price break below the midpoint? Yeah, but I'm looking left. I would need price to break this now to convince me that I'm wrong. Or at least break this. I mean, break it, not just touch it. Price kind of double bottoms here and moves back up. So, and again, there was no signal here. Let's say I'm taking out here. There was no signal here from the indicator, but this is a long. You see that, right? You see that here is the bar closes above the midpoint. This is a long. So even if somehow I'm being taken out, I would not hesitate and get long again. Now it's toward the end of the day, but so that's the YM. Another very choppy market on a Friday. I just want to show you how to handle choppy markets, because the reality is most of the time markets are not directional. Most of the time they are choppy, but most of the time we see better movement as far as the range, better movement that we saw on Friday. Okay, so this is the NASDAQ. Now, same exact idea, right? These are the levels. Here is the midpoint. As the market opens, we are below the midpoint. What does that mean? That means I'm looking for short setups for now, right? But as I mentioned before, it doesn't mean I just take any short, right? I'm not taking these shorts way too far away from the midpoint. Again, in my trading, the risk is beyond this midpoint. So it's all a question is how much risk am I willing to take? I don't want to short here. Would I consider these shorts? Yeah, I mean that's not bad. Maybe I would try and wait to see if there was any move closer to the midpoint. And actually, again, I mean there was no signal here, but this is pretty good. This price is pretty close to this midpoint. Again, there was no way of knowing, right, in real time, if there would be a better attempt. But this is pretty good. If I'm taking a short here, where is my risk? Well, slightly above. Could my risk be above this pivot high here? It could be, and I'll leave it up to individual trader. Not that there was something wrong with it, but again, even if price gets here and takes you out, are you still wrong on your direction? Not necessarily. There was no break of the midpoint yet. So even if price is here, so I would still be in the short. Now, let's say I'm trading 2 E-minis as my normal risk size, right? 2 E-minis. Maybe I would consider trading just one, right? Because it's not exactly at the midpoint. I'm kind of far. Maybe 2 E-minis is a bit much as far as risk. I can reduce my leverage. If the risk is too much, I can always reduce my leverage. If I'm normally trading 1 E-mini, maybe I would consider 5 micros, 4 micros, 3 micros, whatever. It's just that I don't want to be taken out randomly just to see the price go my way, because below the midpoint there is still weakness, right? So I would take a short. There is no signal here. I would take this short. I would. So there was a move lower. But again, as you will see, just like in the Russell, just like in the YM, not quite reaching this sell level. Makes a nice attempt at it, comes close, but I think misses it by about 17 points. And then what do we expect? We expect price in time to hit this sell level. Now, it took a long time. If you miss the short by the midpoint, what do you do? Could you take these subsequent short setups, these short places where price reverses down again? Again, you could. The question is the risk, right? I mean, that's the question. So I would say, I would wait. If I miss the original one, the original entry, look, there are 7 markets, right, that I post levels for. If you miss any one of them, there are still other markets. You should never compromise your trading plan because you missed a trade for whatever reason. You should still stick to your plan. My plan would still be, if I'm taking a short here, my stop is still here, which is ridiculous, so I wouldn't do it. Here price is arriving at the sell level. Now, if you were in the room, you heard me say once we reach it, we should be bouncing out of here. At least a bounce or possible even a reversal. So when price arrives and you are in the room, you know to start looking for long setups. And price indeed moves away. If you're not in the room, you're still aware of the fact that these levels produce a reaction for the most part, but it is still far more aggressive to take a reversal trade from this level. It's just aggressive. it yes, most of the time there is some kind of a reaction, but as we will see with gold, if we have a directional market, price could easily break this sell level and continue lower. So if you're not in the room, I would not suggest doing this on your own. So now later on in the day, there was movement again away from the sell level. Here comes the price to test the midpoint. Again, doesn't quite reach it. But let's say I'm waiting all this time, right? I'm still waiting for price to be kind of close to this midpoint so I can take a trade and not be that far away from my stop as, let's say, here. I mean, that's way too far away. This is somewhat more reasonable. Could you take a short here? You could. Again, not exactly the midpoint. I would reduce my leverage. I would be down in size in some way, either less E-mini contracts or instead of an E-mini, a few micros. And here's the move down. Now, here's a situation where price now breaks through the midpoint. Again, let's make this bigger. Price breaks through the midpoint, retests it, and now there is a long signal here. A bar closing up above the midpoint after testing it. Let's say I'm still trading and I don't like this time of day. Let's say I'm still trading. I would take this kind of a setup, especially if it's early in the morning, again, 10 out of 10 times. And if my goal is reasonable, I reached it, for sure. So again, not the best time of day, but price breaks below the midpoint, retests it, closes down. Is this here, this one over here, when this bar closes, is it a legitimate short? The answer is yes, it is. Yes, it is. Below the midpoint. If I did not take my profit here, is this a stop? I think it could be. I think it could be a stop. Price does go above the midpoint temporarily, very quickly declines again. When it does, I would re-enter again right over here, right? Try to make up this loss. And then some. So here is another move down. Unfortunately, and again, that's probably mostly because of the time of day. But here is another move down. But before they do that, they just spike up. It is what it is. Then they go down. And again, looks like a trip toward the sell level, right? So just because price bounced away from the sell level after the first test of it does not mean that it cannot do it again. And sure enough, below the midpoint, we see at least another attempt at the sell level. I don't know if they actually get there. I don't think they get there. No, just go sideways the rest of the afternoon. Again, you see the difference between this kind of short, right? This kind of short, and let's say this kind of short, right? It is much better slightly below the midpoint as opposed to very close to a target level over here. Crude oil was also pretty sideways. Again, right above the midpoint. I'm not looking at short setups. I'm looking at longs. Here is a long. And as long as you're reasonable, you hit your target. Price just stops a bit before the level. Again, Friday was this kind of day. Stopped slightly before reversing. So again, this to me here, for example, is a good long. This one is slightly less exciting. Would have still worked out, I think. I would not take this short. Ended up being beautiful. And now this is toward the end of the day anyway. Let's say it's not toward the end of the day. Would I be excited about this short? I would not be. Unfortunately, there was no kind of a break and retest and a reversal. This would have been much more ideal if the setup was here, somewhere as opposed to down here. And you see how just like it missed the buy level by a few ticks, it missed the sell level by a few ticks. Those are challenging markets. Normally you don't see this kind of thing. Friday was just this kind of a day. Anyway, let's take a look at the market that did move, and that was gold. So gold first moved toward the buy level, hit the buy level pretty much to the tick. So let's kind of make this bigger. Right, so am I excited about this long? Not really. That's what I'm excited about. I mean, let's make this somewhat bigger so we can really see. No signal from the indicator, but again, regardless of the indicator, understand the approach. Here is a test of the midpoint to the tick. A bar is closing up. To me, this is the long, right over here. The risk is small, relatively speaking. The risk is small. The other side of the midpoint is right here, along with the pivot low. So not much of a risk. I am targeting the buy level. If I'm in multiples, I'm taking something along the way. I am definitely protecting myself once price arrives at this target. And sure enough, reverses, goes long again. Would I take this long? I would not. Price already reached, and now I'm very close to it again, so I would not be taking this long, but there was enough here for, you know, some scalp for sure. And then price goes down below the midpoint. So below the midpoint, right? Beautiful short, small risk. Where's my risk? Right here. Fairly small risk, or at least reasonable risk, right? Taking a short, moving down to the sell level. Here is a reaction from the sell level. So again, would I be taking a short here? I would not be ever taking a short here, because then it's right into the target, and I expect a bounce from a target. So I would not be taking a short here. Never. I don't care what any indicator says. I would not be doing that. But remember I mentioned before, don't just assume that this level is necessarily a reversal. Some reaction could be, and there is some reaction here, but be careful with just saying, okay, now price is going to go all the way up to the midpoint. Because if a market is directional, and gold was directional on Friday as opposed to the indices and crude, so there is a break, a sharp break below it, and price just keeps on going. I would not consider any of these longs. Never. Not saying I'd be taking shorts either, but I would not be trying to be a hero and try to find a place where price would reverse to the long side when it shows me that the market is weak and directional. I would not try to be a hero here. Price just continues lower and closes almost on the lows of the day. So this is an example of a directional market that's breaking below the midpoint, arrives at the sell level, some reaction from the sell level, but then breaks below it. And that's why you should be careful with just assuming every time that when price arrives, it's more than just a reaction, it's a reversal, and you're going to try and ride the long trade all the way up. Nope, that's definitely not always the case. Even most of the time, I cannot say that it's the case. All right, let's talk about the S&P. So again, this is a bit pre-market. Maybe you're not trading pre-market, but just to kind of show the example here, let's make this somewhat bigger. So here as it is, right? A test of the midpoint. Here is the bar closing down. To me, this is a perfect short. Again, if I'm trading at this time, I take it 10 out of 10 times, definitely. Close to the midpoint, slightly below. My stop would be like above this pivot here, right here. Reasonable. And if I'm reasonable with my daily goal, I met it here, not a problem. Another test of the midpoint. No signal here, but we can see a bar closing down right here. Again, beautiful, perfect short trade, price moving down. And of course, then we expect a move toward the sell level. Now, would I be taking this signal? Same exact thing as before. Everything is always the same. I'm just showing you different examples in different markets, but you can see the same theme, right? Do I want to take a short right into a level? No, I do not. At the very least, I expect some kind of reaction from this target. What is this target? This target is from a move below the midpoint, right? Below the midpoint, this is the target. It's in a way a completion of a move, and completions often have reactions. Not only that, if you were in the room, you would know, of course, that I was looking to buy this level. 21 was a very important price to me, and I expected a move back to at least 36. But that's if you were in the room. If you're not in the room, if you could not make it to the room, it is aggressive on your own to just say, I'm going to take a long. It is aggressive. Even though most of the time there are at least reactions, we still don't know if price is going to just completely break down like it did with gold, right? So, but price does form up and moves up. Another test of the same level here, right? 21. A move to 36. But below the midpoint, the price is still weak. And I said that in the room as well. The trade was toward 36. The fact is, however, as price is arriving at 40, we could still see weakness. Now, would I be taking a short anyway here? I would not be. A bit too far away from me. Again, if you would consider it, I would just maybe reduce the leverage. I guess that's the answer. If you are looking to take a short, in this case, and price is a good distance away, I guess it's okay to take a short, but you just must reduce your leverage. I mean, that's how I would do it. Very different here, right? I mean, this is a beauty. I mean, this is, right, a kiss of the midpoint. So is this. If I took a short here, would I get stopped here? No. My stop would be slightly above the midpoint. That is why, right? If I take a short here and price comes and takes me out, am I wrong on my direction? No, I'm not. Price is still below the midpoint, right? So if this is the short I'm taking, and let's say I'm not taking any profit yet, I would just keep my stop. If I'm trailing the price and I'm taking out, would I take another short? Yes, I would. Yes, I would take a short here. Again, stop is slightly above the midpoint. Very small risk, right? Reasonable risk. Price moves down. If I was in this trade, probably would have been taken out on a trail. Again, I never allow a winning trade become a losing trade. So I hope this was helpful. If it was, please leave me a like and subscribe. Leave a comment. It all helps, as still trying to grow this YouTube channel. Yeah, and it's all, again, that's how I got started. That's how I envisioned this service being. Just helping traders identify good locations and market direction, but still trade in their own way, using whatever indicators they like or setups that they like. I just wanted to provide a map, I guess, guidance for market direction. So that's really it for this video. My email is in the description if you have any questions. Of course, if you leave a comment. I will respond. Thank you, everyone. See you next time.